Well, owning your own financial freedom, that's what Taylor Financial will help you do. And joining us today is Thomas Yannetti, Director of Financial Planning and a Wealth Management Advisor. So welcome to the show. So great to have you here. I want to start by learning a little bit more about Taylor Financial.
Yeah, so thank you for having me. Really excited to be here today.
Yeah.
Taylor Financial, we're an independent, comprehensive financial planning firm. So we really look at the whole picture from investments, insurance, retirement, taxes, and estate planning. Really a little bit about myself. I have my master's in financial planning. I'm a chartered financial consultant, a certified financial planner, and a retirement income certified professional. So I've really done a ton of studying to provide the best advice for my clients.
Yeah, so today we're talking about retirement strategies. So how can viewers create their own income stream during retirement?
Yeah, so great question. So most people spend about 75% of their highest income earning years in retirement. So that's a lot. So that's what you have to plan for. And usually what you want to do is you want to recreate your paycheck. So you want to look at guaranteed income options, cash reserves, investments, and then maybe you have a real estate portfolio and how that all works together.
So how do their pensions and maybe their 401k work into all of this?
Yeah. So pensions and 401ks, they're the foundation of retirement. So with a pension, it's a guaranteed income stream that employers usually sponsor. You have single life options and then spousal options. So the single life is the highest payment amount, but then that income stops at death. Compared to the spousal option, that income continues on.
Okay, so how can employees, people who are working right now, increase safe withdrawal rates?
Yeah, so a safe withdrawal rate's anywhere from 3 to 4% that you could take out of your investment portfolio or a 401k. So if you had $1 million in your 401k, that's $30,000 to $40,000 annually, right? So if you wanted to increase that safe withdrawal rate, but not take additional risk, there's 3 strategies that you could implement. So the first strategy is reducing risk early on in retirement. So this is usually by asset allocation. So how much money do you have in stocks and bonds? We don't want to be too aggressive or too conservative. We want to fall somewhere right in the middle, or having a cash reserve. So that cash reserve, when markets do come down, we're going to pull out of that cash reserve.
Okay, so
Yep, and then the second strategy would be guaranteed income option. So usually you'll implement through an insurance company some type of annuity plan that has an income feature. You're definitely going to want to work with a professional to help guide you through that decision.
Yeah.
And then the third is really tax planning. So just as important as how your money is invested, it's where that money lies. So in those different buckets, so it will help you plan better for income. So if you have those 3 strategies set up, you're gonna have your money last a lot longer for you.
So that's, I know you in the past you've talked about setting up your money in 3 different buckets, and I know this, we're looking at the graphic right here. So that's what you were talking about, right? The 3 different buckets?
Yeah, so it's gonna be the first page on this graph. It's a tax control triangle. So you have your taxable, your tax deferred, and then your tax advantage account. So your taxable account is any money market, CDs, any investments that are outside of your retirement that are taxed annually. Your tax deferred are your money that you get a deduction today. It grows tax deferred, and then it's all taxable in the future. And then that top bucket is the tax advantage account, where it's a hybrid of both, where you're taxed today, it grows tax deferred, and then it's tax free in the future. So really, by having a balance of these accounts, you have the ability to control your taxes and when and how they're taxed. And that could save you tens of thousands of dollars over your lifetime.
Yeah, so much information, such important information. Thank you for sharing it with us.
Of course.
And I want to let people know that if you would like to learn more about everything that we just talked about today, just head to their website, taylorfinancial.com.